Hello and welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for chapter 10, the short exercises. Before we get started, note accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. All right, so short exercise 10-2. It says here, let me get my pen. It says here, Sullivan Corp issued stock above par on July 31st. Answer the following questions. Sullivan Corp received $6 million for the issuance of the stock. The par value of stock was only $4.5 million. Was the excess amount of $1.5 million a profit to Sullivan? Did the excess affect net income? If not, what was it? Right. So the first question is, was the excess of $1.5 million a profit to Sullivan? No, it's not profit. When we're talking about stock, we're talking about the equity section, right? We're not talking about we're talking about the equity section of the balance sheet. We're not talking about the income statement, right? Where we have revenues less expenses to give us the profit or loss, all right? So we're just not talking about profit. Did the excess affect net income? If not, what was it, right? So if we know it's not profit and we know we're not affecting the net income, what does it affect? Well, remember we have in our equity section, we think in terms of the stock, and anything over and above, in this case the $1.5 million, is paid in capital in excess of the par, right? In excess of par. Okay, so the $4.5 million is what we get for par, and then the $1.5 million is what's over and above, and that's the paid in capital. Okay. So now number 2 says, suppose the par value of the stock had been $2 per share, $5 per share, or $10 per share. Would a change in the par value of the company's stock affects Sullivan's total paid in capital? When using stock, what does affect total paid in capital? When issuing stock, what does affect total paid in capital? Now I'm going to read the answer from the study guide, the solution manual. It says, no, a change in the par value of the company's stock doesn't affect total paid in capital. I don't know about that. And I'll explain in just a second. And then it also says the issue price of the stock affects total paid in capital. The higher the issue price of the stock, the higher paid in capital, and vice versa. All right. Why say I don't agree? I don't know about that is because let's use these numbers here. Okay. So if Sullivan is receiving $6 million, right, and par was $4.5 million, doesn't matter whether it was at $2 a share, $5 a share, or $10 a share in par, right? It says no, the change in the par value of the company's stock doesn't affect the total paid in capital, right? Now as I think about it, right? The issue that I had was it all depends upon the number of shares, okay? If I keep the number of shares the same, right? So let me try to just do this math in my head real quick here to get par at $4.5 million, and let's say it's let me do some math. 4,500,000 divided by 10. Okay, so come on, there we go. So if we say that par, it was at $10 a share, okay, that means we had 450,000 shares, okay, at $10 a share would give us $4.5 million at par, okay. And when I first read this, it says suppose the par value had been $2, $5, or $10. Now notice it's not telling us the number of shares. Okay, so would the change in the par value of the company's stock affect Sullivan's total paid-in capital? And my first thought was, as I read the answer, being no, a change in the par value of stock doesn't affect the total paid-in capital. I thought to myself, that can't be right. Because let's say if I have 450,000 shares, okay, the same 450,000, but it's at $2 a share par, okay? So, we're talking about $900,000 at par, okay? And then 6 million less than 900,000 at par, okay, would mean we have 5.1 million in excess of capital. So the issue here being, as I was reading it, is they're kind of like saying that this is par, and it doesn't matter how many shares. What we're thinking about is we're talking about the dollars per share, the par value per share. So if we discount the fact that it doesn't matter how many shares we have, and we change the dollar value of the share, well then yes, the answer in the solution manual is correct. And it means no, a change in the par value doesn't affect the total paid in capital because the par value is always going to be 4.5 million. Okay, but again, that's assuming that we're keeping the number of shares the same. We don't know the number of shares. Okay, if we don't care about the number of shares, then yeah, our par is the 4.5 million, and that's the bottom line. It doesn't matter what the dollar value is, and it doesn't matter what the number of shares is. But if we sit and we take it from the perspective of, well, if I have 4.5 million, okay, well, I don't think in terms of 4.5 million. If I think in terms of I have a certain number of shares, and then I apply the $2, the $5, and the $10, well then yes, that changes the par value. Like in this case here, for $2 a share at 450,000 shares is only 900,000. Okay, so that's obviously going to affect the paid-in capital. And the same thing with the $5 and the $10. At $10 we have 4.5 million. Okay, so you have to look at both components, all right? And so while I was, like I said, while I was reading that, I was like, what is, that it was running through my head. But notice that this doesn't seem right, okay? But notice what I'm doing is I'm taking and I'm thinking about the overall concept, okay? And I'll go back to this again. In accounting, you don't just look at, you can't, you have to keep the entire concept in mind, and you use the pieces that you need, right, for that particular situation that fits within the entire overall concept, okay? And that's exactly what happened when I was reading this solution, okay? Because using those numbers, if you have 6 mil and you take out 4.5 mil for par, yeah, you have 1.5 mil for your paid-in capital. But the question is, what makes up that 4.5 mil for par? If we keep the number of shares the same, then applying $2 per share, $5 per share, or $10 per share as par obviously is going to change the dollar amount that we have for par. All right, it's not going to be 4.5 million, depending upon the dollar value we apply to the shares. But if we sit there and we say, we don't know how many shares and we really don't care, and we change the dollar value of the share, but yet it always remains equal to 4.5 million because we don't care about the number of shares, well then the answer is no. Changing the par value doesn't change the paid in capital. Okay. All right. So I thought this, honestly, I thought this was going to be a short exercise because remember, I work through these things pretty much just out of my head, just like if I'm a student sitting there next to you at the kitchen table trying to work on these problems. And I originally read this and I thought, 5 to 10 minutes, and that means I should get 2 exercises out of this video. But unfortunately, I run into this thought process, and now I'm at 10 minutes, so I'm going to stop the video here and pick up in the next video with the next exercise. If you didn't understand this, go back and watch the theory videos. And if you're still not understanding it, then feel free to contact an instructor.